The most exciting thing that you can do with your finances is put them in a place where there's no way that it would ever go down. It could only go up. And there are tools out there that I know of and that I've helped clients with that they can take what they have right now, especially in the situation that we're in, and grow it. But right now, I want to show you the power of velocity banking and making sure that what the bank meant for your demise, you created as your good. Are you ready? Let's go ahead and do it. We're going to go ahead and go back to the basics and make sure that this complex thing, right, with the financial system and all the things that are going on, the inflation, right? We're going to take the complex. We're going to make it as simple as possible. Let's go ahead and hop right into it. Before we do that, go ahead and like, share, and subscribe. People all over the world need to know this financial system. They need to know about velocity banking so that they can feed their kids, so that they can feed themselves, so that they can feed their community, so that they can pay the rent, and not only that, but build wealth for future generations. Let's get right into it. So we have one circle, and we're going to have it as your line of credit. Whatever line of credit this is, folks, okay? HELOC, BLOC, PLOC, doesn't matter. Then we have over here in the other corner, right, your loan, okay? And we're going to go ahead and demonstrate that as a circle. Now, one of these is your enemy, and one of these is your friend. Remember, whether or not you have a line of credit or a loan, it all depends on how it is calculated. So say this word with me, amortization. That's right, let's say it again. Amortization, okay, is an enemy. That's right, amortization. We don't want any amortized loans. We don't even want any amortized lines of credit, okay? Lines of credit, proper lines of credit, are supposed to be revolving lines of credit. That means it's two ways. You pay and you can borrow again. You pay and you can borrow again. You pay and borrow again. Whereas loans, it only has one way. Your money has only one way to go, and that's away from you and towards the big banks, the big credit unions, those people that are like, listen, we will take your house if you miss so many payments, period. Even though we got the house for free. Listen, oh yeah, did you know that? Oh man, let me tell you, the way they work that paperwork is magical, seriously. So in the line of credit, since we have the pay borrow system here, we need to rethink what they've told us about cutting up our credit cards. Maybe that's not the best thing for us to do. So let's say we have a line of credit and let's say it's a 15K limit, okay? And the balance is 12K. Oh, that's a 15, isn't it? So the balance is 12K. And we have a loan, right, of let's say 200,000. We're going to put that right here, 200. At 6% with $1,200 a month. Now it's so easy to say, you know what, there is no, I'm making 5,000. Let's say I'm making 5,000 in income. I have 3,000 in expenses. Okay. E is expenses. 5K is I. And you're saying, well, what does that have to do with the loan, right? You just put up line of credit and loan. What does that have to do with it? I'm not going to pay my loan with a credit card or a line of credit, am I, CJ? It all depends on what your definition of pay is. You see, I like to use the term transfer, all right? And let us for a minute stop using our checking accounts as a holding tank, that black hole account. Inflation is 7.9%. So as your money stays in your checking account, look at what your dollars are doing. It's not working for you at all. You hear that? That's right. The future is calling. Now, what I want you to do is I want you to rethink how you're using your line of credit. So let's use our line of credit this time to get rid of our mortgages, and this is how we do it. Instead of our income going inside of our checking account, it's actually going to go towards our balance. Can I do a mic drop? A mark drop? Mark drop. All right. And from now on, we're actually going to be paying. Now, when we do that, what happens to this balance? Doesn't it go down? It goes down by 5,000, doesn't it? And so now our balance is 7,000. What's happening to the credit card? Those guys are like, this dude or dudette just paid $5,000. And so they're getting excited now. But you still got expenses, right? And so guess what? Those expenses are still going to be coming out of the credit card, but it's only $3,000 worth of expenses. What is left within that line of credit? $2,000. Guess what's paying down that 12,000? Oh yeah. What's paying down that 12,000 is the $2,000. So we'll take the 12K and divide it by 2K, and we're going to get 6. Now, what does the 6 represent? Well, the 6 represents how long it's going to take. Okay, that's months or months. Okay, 6 months to pay off this 12K effortlessly. Okay, never forget that. You don't have to go on the beans and rice diet. You don't have to starve yourself. This is effortless. Now, once you've paid that off in 6 months, what are you going to do with this line of credit? I mean, you got 15,000 as your credit limit. What are you going to do with it? That's right. You're going to put that 12K and you're going to chunk it towards the principal. Because when you chunk down the principal, you'll also chunk down the interest, which means more interest for you and less interest for them. So what's 200,000 minus 12K? That's right. You thought I was going to do the math for you? What is that? 188? Look, it's 188. So $188,000 left. And not only that, you're going to be paying it monthly, paying this $1,200 monthly, which is going to accelerate that mortgage pay down, which is going to accelerate you eliminating that mortgage, which is going to accelerate this mortgage payoff. And you'll be paid off your mortgage within 5 to 7 years, especially when you chunk the principal. So listen, these are the key takeaways. We're going to make sure that we use our line of credit as our new checking account. And when this balance is full, you'll take the 12K or a portion of that line of credit. Okay, now by line of credit, I mean credit card, HELOC, BLOC, personal line of credit, whatever your choice is. And then you're going to actually place that chunking of your line of credit towards this principal. So this is the chunking of the principal right here. Okay, you're going to take this amount out hugely with this, okay, with your line of credit. Okay, and as you continue to pay monthly on the mortgage, what else will happen? This number gets smaller and smaller. And remember how you're paying your mortgage, or excuse me, remember how you're paying your line of credit. You're paying it as you get paid. And the money that's left in there is what's paying off the line of credit. So no, you don't have 2 debts. This is your new line of credit because you can pay and borrow and pay and borrow. It's just a beautiful thing. Folks, contact me if you have any questions. We got everything you need in the links below. God bless you. Don't forget, man, share this all over the place because you know we need it, especially during these times. God bless and have a great night.